Welcome to Illuminati Silver. We tell the truth about silver. Today is Wednesday, the 16th of September 2020, and yesterday we published a video entitled Commodity and Equity Markets Steady, Awaiting FOMC Decision Tomorrow, where we highlighted that the FOMC of the Federal Reserve will be reporting its interest rate decision, together with any commitments to further QE measures or stimulus recommendations today. We pointed out that it's important to remember that a short while ago, around a month, Fed Chair Jerome Powell stated that the central bank would tolerate inflation exceeding its target rate of 2% if necessary, as it viewed the longer term as more important and accepted the need to ensure that the US economy does not collapse while ravaged by the economic consequences of the coronavirus crisis. Now, Federal Reserve Chair Jerome Powell could expect questions this week on what extra steps the central bank would take to support growth. But policymakers were not expected to change the current guidance in their statement on how long interest rates will stay near zero. Officials have in fact said that rates will remain low until the economy has recovered from the pandemic and is on track to meet the Fed's twin goals for employment and price stability. Well, the announcement has now been made, and rates are being held. And the FOMC has more or less confirmed what Jerome Powell stated at the virtual Jackson Hole conference. They are expecting to see interest rates remain close to zero through to 2023, with only one or two expecting either a rise or further sustaining of such low rates beyond then. The detail did suggest that the Fed could be holding rates down and maintaining its QE bond buying program for some time to come until the adverse effects of the economy have to a large extent been corrected. But interesting, the economic projections were more optimistic than many envisaged. So let's take a brief look at how Bloomberg has reported this in the last few minutes. Bloomberg Article dated September 16th, 2020, 8:09 p.m. GMT +1. Headline: Fed signals rates to stay near zero for at least 3 years. The Federal Reserve left interest rates near zero and signaled it would hold them there through at least 2023 to help the US economy recover from the coronavirus pandemic. The FOMC expects to maintain an accommodative stance of monetary policy until it achieves inflation averaging 2% over time, and longer-term inflation expectations remain well anchored at 2%, the central bank said in a statement Wednesday following a 2-day policy meeting. The statement reflects the central bank's new long-term policy framework, in which officials will allow inflation to overshoot their 2% target after periods of underperformance. That shift was announced by Chair Jerome Powell last month at the central bank's annual Jackson Hole policy conference. This very strong, very powerful guidance shows both our confidence and our determination, Powell told a press conference following the decision. We're strongly committed to achieving our goals and the overshoot. Treasuries were little changed, with the 10-year yield steady at about 0.69%. As investors digested the news, stocks gained. The vote in the FOMC's final scheduled meeting before the US presidential election on November the 3rd was 8-2. Dallas Fed President Robert Kaplan dissented, preferring to retain greater policy rate flexibility, while Minneapolis Fed President Neil Kashkari dissented in favor of waiting for a rate hike until core inflation has reached 2% on a sustained basis. Powell and other Fed officials have stressed in recent weeks that the US recovery is highly dependent on the nation's ability to better control the coronavirus, and that further fiscal stimulus is likely needed to support jobs and incomes. The Fed on Wednesday committed to using its full range of tools to support the economic recovery. The central bank repeated it will continue buying treasuries and mortgage-backed securities, at least at the current pace, to sustain smooth market functioning. A separate statement on Wednesday pegged those amounts at $80 billion of treasuries a month and $40 billion of mortgage-backed securities. Officials see rates staying ultra-low through 2023, according to the median projection of their quarterly forecasts, though 4 officials penciled in at least one hike in 2023. In other updates to quarterly forecasts, Fed officials see a shallower economic contraction this year than before, but a slower recovery in the coming years. The recovery has progressed more quickly than generally expected, Powell said, while cautioning that the pace of activity will likely slow and the path ahead remains highly uncertain. In addition to slashing borrowing costs in March, the central bank has pumped trillions of dollars into the financial system through bond purchases and launched a slew of emergency lending facilities to keep businesses afloat. The economy has partly recovered from the steepest downturn on record, and some sectors such as housing are doing well, but COVID-19 continues to kill thousands of Americans each week. Unemployment remains high, and industries like hospitality and travel are depressed. Moreover, temporary extra jobless benefits are running out, and the political stalemate over a new round of stimulus threatens to set back the economy. Uncertainty could hang over government policies at least until the outcome of the presidential and congressional elections is clear. Republicans, including President Donald Trump, who trails challenger Joe Biden in national polls, have proposed a smaller package of aid than Democrats have. Powell said that fiscal measures taken early in the crisis were a big help, and more was probably needed. The overwhelming majority of private forecasters who project an ongoing recovery are assuming there will be additional substantial fiscal support, he said, noting around 11 million Americans remain out of work and will require further assistance. Here are some highlights from the Fed's latest forecast. Gross domestic product, 3.7% contraction in 2020. That is against June estimates of a 6.5% contraction. And 4% growth in 2021. Fourth quarter unemployment rate 7.6% in 2020, June estimate 9.3%, 5.5% in 2021. PCE inflation 1.2% in 2020, June estimate 0.8%, with 1.7% inflation in 2021. And longer run federal funds rate 2.5%, unchanged from in June. We shall discuss these now, having closed this article. Well, the US equity markets have not closed as yet, but we can already see that the Dow is up 36 points at 28,032. The S&P 500 index is up 1 at 3,402, and the Nasdaq Composite Index is down 139. However, obviously these figures can change before the close of play this evening. Now, the dollar index has strengthened a little and is standing at 93.2, and crude oil prices have actually increased around $1.80 a barrel. Now, gold is up around $4 today at $1,958, and silver is down just 3 cents at $27.13, though it has been up and down quite a bit today. And Bitcoin is up $102 currently at $10,767. Now, we shall have to wait really until tomorrow to see how the rest of the world responds to what the Fed has announced this evening. And we shall, of course, have the Bank of England giving its assessment on UK rates tomorrow. Now, before we go, it's useful to note that retail sales in the United States for August, which were announced earlier today, came in a positive 0.6%, marginally lower than expectations, but still a positive figure. But if we exclude autos or automobiles, the rate was plus 0.7%, which was slightly higher than expectations. Now, tomorrow we also have the weekly jobless claims figures, which, depending on what they are, will indeed attract some attention. So, what do you think about the FOMC announcement today? And has it made any difference to how you may view precious metal prices over the coming weeks and months? Do share your thoughts. And of course, as always, if you haven't already subscribed to our channel, we'd be grateful if you would consider doing so, not forgetting to press the bell sign so that you are then notified of new videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.